Imagine this: every single company you encounter within the first hour of your day is under the heavy influence of one entity. BlackRock, your phone, your laptop, your breakfast stop at McDonald's, or even the car you drive. They are an investment firm, but their control stretches far beyond imagination. They hold an enormous number of shares in some of the world's largest corporations, totaling a mind-blowing $10 trillion in assets across the globe. Wrap your mind around this. That's half of America's entire GDP. And who holds this immense power? You guessed it, just one company, BlackRock. BlackRock's dominance and history. Now, it might be tempting to dismiss such a dominating force as purely evil, but hold on. BlackRock doesn't actually own these companies or their shares. Nope, not at all. Their clients are the ones who possess the shares, and BlackRock simply acts as their manager. But don't be fooled by this apparent detachment. With such an astronomical amount of stock under their control, BlackRock undeniably exerts an immense influence on these companies. It's no wonder corporations strive to stay in BlackRock's good graces, fearing the withdrawal of their investments. But here's where things get really intriguing. While BlackRock may not be the epitome of evil, there's an air of secrecy surrounding them, a shroud of shady dealings. BlackRock was founded by Larry Fink 34 years ago, and in a mere 5 years, he transformed the company's value from a humble $5 million to a staggering $8 billion. How did he do it? By skillfully managing the money of esteemed institutions, such as pensions, university endowments, and the unimaginably wealthy. And here's the kicker: Fink himself now holds positions on the Council on Foreign Relations and the World Economic Forum. He commands the attention of business tycoons and political leaders worldwide. The reach of BlackRock's influence is staggering, and they stand on the precipice of consolidating so much power that they could potentially control the entire world. Can you feel the suspense building? The puzzle pieces are falling into place, revealing a shadowy force manipulating the destiny of companies and holding sway over the global stage. BlackRock's true nature remains elusive, their hypocrisy lurking beneath the surface. And this is going to be darker than we ever imagined. 2008 market crash turns out to be BlackRock's lottery. A day of financial chaos and despair strikes Wall Street, rivaling the catastrophic crash of 1987 and the infamous 2008 financial collapse. Yet, amidst this turmoil, one entity emerges victorious: BlackRock. They seize an unparalleled opportunity, snatching up control over the very banks that had crumbled. It's as if the chaos was a golden ticket for BlackRock, catapulting them into an unassailable position. And who benefits the most from this power grab? Larry Fink, a man already swimming in immense wealth, now possesses even more power, and, intriguingly, a direct line to the American government. Hold on, because lightning strikes twice. In 2020, as the world grapples with the early days of the pandemic, the government once again turns to BlackRock. This time, their mission is to safeguard the Federal Reserve from the looming financial catastrophe. It's during these moments of economic uncertainty that BlackRock cunningly ascends the ladder of power. Their rise to dominance is fueled by these opportune crises, as if they thrive on the chaos that engulfs the world. But remember, with great power comes great responsibility. BlackRock wants you to believe that they are the epitome of responsibility. In the summer of 2020, when global outrage erupts over the murder of George Floyd, BlackRock cunningly issues a statement. They proclaim that companies must serve a social purpose, attempting to position themselves as champions of change. To solidify this image, they vow to assign every company an ESG, environmental, social, and governance score, acting as if they are the arbiter of morality. BlackRock, a seemingly unstoppable force, capitalizes on financial crises to secure control while donning the mask of responsibility. But what lies beneath their carefully constructed facade? The stage is set, folks. The true extent of BlackRock's power and its intentions remain hidden in the shadows, awaiting revelation. This exposed the hypocrisy of BlackRock itself, because BlackRock, the self-proclaimed champion of ESG, environmental, social, and governance investing, comes to light. Behind its carefully crafted facade this colossal company remains the top investor in fossil fuels and war profiteering. Yes, you heard that right. BlackRock, the supposed advocate for change, maintains cozy relationships with those who trample on human rights. But hold on, they aren't the only culprits in this grand charade. Vanguard, the world's second-largest investment firm. They too are guilty of the same duplicity. On one hand, they promote the virtues of ESG investing, while on the other hand, they refuse to sever ties with oil and gas companies or divest from entities mired in human rights controversies. It's a recurring pattern, folks. BlackRock, Vanguard, and their ilk perform these acts of superficial progress that appear commendable to the public eye. But in the shadows, they remain unwilling to disrupt their lucrative investments, even if it means sacrificing the greater good of society. Let's take a closer look at their stance on climate change. BlackRock claims that climate risk is synonymous with investment risk. They argue that supporting companies that neglect climate change policies is a perilous move. In 2021, they made headlines by orchestrating a shakeup within ExxonMobil's board, installing new members who pledged to address climate change. On the surface, it seems like a commendable action, right? Well, here's the twist. Despite this move, BlackRock continues to hold the dubious distinction of being the world's largest investor in fossil fuels. They may have set self-imposed goals to reduce emissions, but when you consider their massive investments in fossil fuels, it starts to feel more like empty virtue signaling than a genuine effort to drive meaningful change. And brace yourself, for the hypocrisy doesn't stop there. There are more layers to this intricate dance of deception. BlackRock and its counterparts wear masks of righteousness, projecting an image of responsibility and progress. But as we peel back the layers, we uncover a disconcerting reality. Their actions and investments paint a different picture, one rife with contradictions and self-interest. The stage is set for the grand reveal, where the true motives of these investment giants lurk in the shadows, waiting to be exposed. The company claims to speak out against gun violence, while simultaneously being the largest investor in gun manufacturers. Yes, you heard it right. BlackRock holds significant stakes in companies like Sturm, Ruger, and Vista Outdoor, among others. They lecture these manufacturers about the need for improved safety, but it remains unclear whether any meaningful policy changes have been made. But wait, there's more. BlackRock's involvement extends beyond America's borders. Through their US Aerospace and Defense Fund, they pour billions of dollars into major weapons contractors worldwide, such as Lockheed Martin, Raytheon, and General Dynamics. These very companies profit from massive Pentagon contracts and utilize taxpayer money to fuel violence and warfare around the globe. These weapons often end up in the hands of foreign governments, such as Saudi Arabia, who use them to ruthlessly attack innocent civilians during prolonged civil wars, like the one in Yemen. The spread of war and the proliferation of nuclear weapons highlight BlackRock's blatant disregard for its own supposed commitment to human rights. The company's engagement with authoritarian regimes further raises eyebrows. BlackRock proudly claims to be the first global asset manager to gain access to China's mutual fund, leaving skeptics wondering what promises were made by BlackRock's CEO, Larry Fink, to Chinese President Xi Jinping. While it's true that other investment firms seek business in China, it is BlackRock, with its immense power and influence, that has succeeded the most in securing a controversial foothold in this territory. An unexpected turn of events for a US company. BlackRock's power also thrusts it into the center of the Ukrainian conflict, mirroring its involvement with China. Despite their professed focus on ESG investing, BlackRock consistently overlooks human rights concerns in pursuit of financial gain. For years, they have invested in Russia's most prominent companies, with British pensions under BlackRock's control, alone contributing a staggering $630 billion to Russia. BlackRock's potential play in booming cryptocurrency. Let's trace the origins of BlackRock's global dominion. It all began with technology, specifically the advent of exchange-traded funds, ETF. BlackRock built its empire on ETF, which provide diversified investments to minimize risk. Instead of purchasing stocks in individual companies, investors place their money in funds that buy stocks, commodities, and various securities. This practice proved immensely profitable for BlackRock, thanks in part to a portfolio management software called Aladdin, developed in 1998. Aladdin analyses investment outcomes, amassing information and personal data from anyone who has ever knowingly or unknowingly entrusted BlackRock with their money. This allows the software to predict the likelihood of an investment's failure. As a result, BlackRock and its CEO, Larry Fink, climbed to the pinnacle of the industry, becoming go-to firms for ETF investing, an increasingly popular choice. It is estimated that global ETF assets could soar to a mind-boggling $25 trillion by 2025, paving the way for trillions more in BlackRock's coffers. But we needn't wait until 2025 to witness the repercussions of BlackRock's current power. They control overseas assets worth a staggering 10% of the entire world economy. Behemoth companies like Fox, Comcast, and Disney must consult with BlackRock before making significant decisions due to the company's substantial ownership shares. Not to mention, BlackRock and other giants like Vanguard are the primary investors in global powerhouses like Google, Facebook, and Amazon. BlackRock's reach knows no bounds, as their web of contradictions, global influence, and unprecedented power unravels before us. The Fed, known for its conservative approach, made an unprecedented move by turning to BlackRock for assistance in purchasing exchange-traded funds, ETF, for the first time ever. These ETF are like baskets of stocks or corporate bonds, and BlackRock was asked to advise and make these purchases on behalf of the Fed. And guess who benefited the most from this arrangement? None other than BlackRock itself. It's no surprise that a significant portion of the funds poured into these ETF were owned by BlackRock. After all, their claim to fame was the creation and sale of ETFs like the SPY 500, which represents a basket of several companies or even a multitude of companies, effectively averaging out the risk. This is why, when people mention BlackRock's immense size, $10 trillion under management, in retirement funds and more, it's no exaggeration. But how did BlackRock amass such a massive fortune? Well, their business model involved charging commissions known as 2 and 20 in the investment world. This means that right off the bat, they guaranteed themselves a 2% cut of the amount of money they manage for a person. And on top of that, they took a hefty 20% of any profits they made for their clients. It's no wonder BlackRock skyrocketed from managing $7.3 trillion in 2022 to its current colossal stature. The partnership between the Federal Reserve and BlackRock raises eyebrows and begs the question, what other secrets and hidden dealings lie beneath the surface? BlackRock has filed an application for a spot in Bitcoin ETF. That means the rich will now be dominating the crypto stock market after ruling the stock market. In the previous days, BlackRock announced that they will fill an application for a spot in Bitcoin ETF. After when the news hit the floor, investment trading companies like Grayscale has their eyes rolling because there is a legal turf going on between the fund manager at Grayscale and the SEC. Grayscale has been trying to file the same application for the past 2 years and wanted to convert its GBTC holdings into ETF, but fails to get permission from SEC. Stands for Securities and Exchange Commission. It is a body that takes care of 3 things in the crypto market: protecting investors, maintaining equality, fairness, and order in the market, and showing up as an efficient market to invest in. But why Grayscale is willing to convert its GBTC holdings into the ETF? Because the investors who are trading on their portal or dealing in the crypto were not able to liquidate those funds in any form. If a customer has 15,000 bitcoins, then he could not liquidate it into any form like cash or another mortgage form, so they forcefully have to sell it into secondary markets with less exchange and high commission charges. Let's understand this with an example. If we have 1 kg of gold, which is a fungible asset and can be liquidated into any form, be it cash or mortgage, and it had a quantitative value and is widely accepted, it can be circulated in any part of the world and market. On top of that, the price fluctuation is quite less as compared to the crypto. But crypto, on the other hand, doesn't go like that. If you try to liquidate the Bitcoin or any other crypto, then you're charged heavily. That's why a company like Grayscale is looking to convert its GBTC holding into Bitcoin ETF. Grayscale tries cost-cutting for investors while further using the holding by introducing the GBTC discount, in which the investors will get the crypto at a discounted amount, thus able to sell that into another market at a reasonable amount. But the discount that was offered by the company was somewhere 45%. But as the news plunged in about the BlackRock filling, the share price of GBTC dropped to its lowest in May. Following that, when the news escalated in a positive way, BlackRock might get the approval, then the share of GBTC discount plunged to 8% profit within the span of 24 hours to $14 as per the report by TradingView. And at the same time, the Bitcoin ETF shares jumped to 3.5% to almost $25,800. Before this surge in the prices or shares, the GBTC discount was 40%, which was the lowest in May by 4% as compared to 44%. But the good thing is that it's still 5% above its lowest dip of 35% of this year, according to iShop. Now, investments trading companies like GBTC, WisdomTree, Vainesh, ARK Investment Management, with 21 shares, and GBTC have eyes on BlackRock's approval, because these companies have been failing to get approval for the past 2 years. BlackRock's approval for Bitcoin ETF holding could be a game change, according to Bloomberg's senior ETF analyst, Eric Balchunas's tweet. The investment firm BlackRock won regulators' approval for ETFs in 575 cases versus a sole denial, which isn't a big issue, and sooner, the richer will get even more richer. Isn't it surprising how BlackRock got approval but won, and other companies who've been doing the same haven't got any approval after numerous filling? We discussed the latest development in the world of Bitcoin ETFs. BlackRock, a major investment firm, has filed an application for a spot in a Bitcoin ETF, potentially allowing the wealthy to dominate the crypto stock market. This news has raised questions about why other companies, like Grayscale, have struggled to obtain approval for similar applications in the past. Despite the challenges, the concept of a Bitcoin ETF remains attractive, as it provides an opportunity for investors to access Bitcoin without directly owning it. We also explored the background of Bitcoin ETFs and their connection to futures contracts traded on the Chicago Mercantile Exchange. The regulatory landscape plays a crucial role in shaping the future of Bitcoin ETFs and the broader cryptocurrency market. Stay tuned for more updates on this exciting topic. Don't forget to like this video, subscribe to our channel, and hit the notification bell to stay informed about the latest crypto news. Thank you for watching, and we'll see you in the next video.